My name's Deepesh Patel, editor at Trade Finance Global. In this episode of Trade Finance Talks, we're talking trade barriers for intra-African trade. Today, we're going to be talking about container deposits with a focus on East Africa. Container deposits are a big deal, costing about $1.6 billion annually in East Africa alone, which creates significant trade, logistics, and compliance barriers. Also known as container security deposits, these are financial guarantees required by shipping lines to ensure containers are returned on time and in good condition. Today, we have Morgan Lépinoy from Viatrans joining us. They offer a container guarantee solution as an alternative to traditional container deposits. So let's jump in to talk about how their solution addresses some of these challenges and how it helps promote trade in the region. Morgan, welcome to Trade Finance Talks.
Thank you very much, Deepesh. It's a pleasure to be with you today.
Likewise. So quick introduction and the famous elevator pitch. Who are you, where are you from, and what do you do?
All right. So my name is Morgan Lépinoy. I am the managing director and global head of trade facilitation at Viatrans. The company is based in Switzerland and focuses on growing new and redefining traditional business models in the logistics industry. Via Service Tanzania is one of our subsidiary, which has the objective of facilitating trade through innovative digital and financial solutions. Since 2018, we've established in Dar es Salaam and deploying our first trade facilitation solution called the Container Guarantee, which basically addresses that very challenge in East Africa.
Thanks, Morgan. So can you explain the current challenges that SMEs face with container deposits in emerging markets and how this creates those trade barriers?
Sure. So container deposits, by their very nature, are idling substantial amount of cash with the shipping lines. And so that puts small and medium-sized companies at odds when it comes to getting access to cargo or winning business. Tying substantial amount of cash limits their ability, obviously, to invest also in other areas of their business. It also affects their competitiveness, whereby it puts them at a competitive disadvantage compared to larger companies that have the financial resources to do so. It also results in loss of business opportunities, whereby they may be reluctant to go after business if that entails putting down those deposits. And the process of managing container deposits is cumbersome for not only the small and medium-sized companies, but also the shipping lines. So all in all, it creates inefficiencies and creates and participates to increasing the cost of doing business.
Thank you very much. So I guess given those those pain points that they address, how has the adoption of the container guarantee solution impacted cash flow and competitiveness for SMEs in the region?
Well, first of all, the value proposition in the business model are fairly straightforward, and it doesn't add complexities to the business, whether it's for the shipping line or the SMEs. Quite the opposite. The solution, by its nature, simplifies the payment process. It makes it easier, more efficient, and more cost-effective for small and medium-sized companies to release containers. In addition, we have a digital platform that we've built to manage the life cycle of the container guarantee. We try to make it as easier and as secure as possible in order to create those efficiencies and push the automation of the process further.
Okay, so just to summarize 3 points: better value proposition and easy to adopt, simple payment process, and also improving that operational workflow with the digital platform. So
exactly.
Yeah, so now let's talk about partnerships, because I guess the institutional partners really contribute a role in making sure that there is a success story coming out of the container guarantee solution. So how how do you help maintain compliance in the logistics community? And also, how do institutional partnerships really help the container guarantee solution?
Yeah, so there's a couple of points here. The container deposit has been flagged at a local, but also at a regional level as a major obstacle to moving goods. So obviously, because of that, institutional partnerships in endorsement from the logistics community was key in order to build that sustainable solution. In order to do so, we had to work closely with institutional stakeholders because they're the ones that are ensuring and enhancing compliance and the integrity of the logistics community. So we've been working closely with revenues authorities, regulators, shipping and freight forwarding associations in order to manage also that compliance and make sure that we were able to move forward with the solution that addresses not only the needs of the small and medium-sized companies, but also the shipping lines, as it was also paramount that they had also the confidence to accept a solution like this in lieu of the deposit. So, take the revenues authorities, for example. Their contribution to the economic competitiveness of their port is also directly linked to the efficiency and capability of clearing agents that performs their job efficiently in order to secure collection of custom duties and local revenues. So obviously, and as they're also the largest part of our customer base, it was paramount that we had a sort of compliance framework around this customer base in order to ensure the integrity of the system.
Thank you very much. So let's go into a little bit more detail on the liability side, because you're not an insurance company per se. So how does the guarantee solution ensure the liability chain remains intact whilst also enhancing those compliance and safeguarding commercial relationships?
So as you said, we're not an insurance product, so we don't absorb or cover the cost of the demurrage, damage, and total loss when they fall due. We only advance them on behalf of our customers to the shipping lines on a reimbursement basis. So the liability chain remains intact, and we're not distorting any obligation or the responsibility towards repaying those charges. And obviously, we work with the regulators in order to uphold compliance and ensure the integrity of the logistics community. But that goes, beyond the simple scope of the container guarantee. But obviously, what we've seen since we've started is that the value proposition of the container guarantee and the fact that it removes that need for deposit and frees all of that working capital that was before idling and dormant with the shipping line is incentive enough for them to commit to their obligations and uphold themselves the compliance that is required to remain eligible for the next container guarantees.
It sounds like a total win-win, and there's probably quite a considerable cost saving, and therefore let's take a deep dive. I was wondering, do you have any case studies or success stories from businesses that have benefited from using the container guarantee solution?
Yeah, we have many. We have so far registered over 55% of the licensed clearing agents in Tanzania that serve both domestic and transit countries. And amongst those customers, we have, for example, a Tanzanian clearing agent that was a runner-up to win, or at least to try to get a business of 100 plus container shipment. And the shipping lines asked them to put about $100,000 worth of deposits. And obviously they didn't have that amount of cash with them. But they were nonetheless able to secure the business thanks to the container guarantee. Other than that, we have customers that were able to use that working capital to invest further in their fleet, purchase new assets, hire more staff. that before was not possible because a large portion of that cash and that capability was sitting with the shipping lines.
Well, I think that's really interesting. A marked 85 to 90% saving versus the solution, versus what's available in the market currently, and I think really, that does open up to being able to provide a more competitive solution, have a competitive advantage, free up working capital, etc. So quite exciting stuff. Let's talk about the digital platform that you guys have. So how does the Via Service platform contribute to that increased efficiency, transparency, better user experience for businesses within the freight forwarding and logistics sector?
Sure. So the digital platform, we try to make it as user-friendly and easy to use and manage the container guarantees. And the digital platform that we've built is all about that. The customers are able, from the comfort of their office, to order container guarantees. Shipping lines have access to the platform, so they can view in real time whether or not a container guarantee is active for a bill of lading. So it removes a number of admin and paper-related process, which comes to create and contribute to additional efficiencies down the road for both parties.
Thanks, Morgan. So I guess let's talk about trade finance, because we've talked quite a lot about working capital optimization, freeing up cash flow, etc. in trade, in the trading system. So how can trade finance solutions perhaps be integrated or synergized with Via Services container guarantee solution to help really improve that financial stability and help provide growth opportunities within the market?
Great question, Deepesh. Thank you. The container guarantee, by its nature, is freeing a substantial amount of working capital, and that working capital, to be made to better use for the business, requires also the supply of trade financing solutions. And historically, the logistics sector has been long underserved by the banking and lending community, because they've been perceived historically as a high-risk customer segment. One of the reasons is that they lack the logistics expertise. They don't have access to accurate or reliable data to conduct KYC and due diligence. And obviously, if you take the container guarantee business model, the compliance scheme that we have in place, and the track record that we have for our customers, you're able to de-risk and provide the tools for the banks to de-risk that customer segment, and be able then to invest in develop new and customized and competitive trade financing solutions for these very customers.
Thank you very much. I guess both on the supply and demand side, this is a really innovative solution that's addressing a problem that does tie up a considerable amount of working capital for those operators across Africa. I guess promoting African trade is complex, nuanced, and right now very costly. So anything to de-risk or provide the compliance and regulatory burdens is really a win for the continent. And I guess there are lots of expansion plans for your products and your services across the region, right?
Yes, absolutely. Now we're currently in the process of incorporating in Kenya, within an expected deployment later this year. And we're looking at West Africa and Central Africa in the course of next year.
Thank you very much. Well, very exciting, and really looking forward to hearing how that progresses. Morgan, it's been an absolute pleasure having you on Trade Finance Talks TV. Thanks very much for joining.
Thank you very much, Deepesh.